Tushar Mahajan, Executive Director, Head of India Futures and Options Global Markets at Nomura, joins us on the show right now. Tushar, hi, morning. Just wondering how sustainable today's move looks. Do you think Friday's pain is behind us, or do you think we could soon be testing those levels again, given the global as well as domestic uncertainty that the market is dealing with right now?
I think given the kind of sharp sell-off that we've seen over the last 6 to 8 weeks in Indian markets, it's clearly, a 1% move today is not going to signal to the fact that we are out of the woods yet. It's a good bounce back that we've had. More importantly, we've recovered from the 200 DMA levels, where we had slipped in on Friday. So yesterday, while we traded below that level, there was no kind of a panic sell-off below that level, and we're building on today. So I hope this kind of sustains. This move could probably, get us back to about 10,350, 10,400 odd level, but I think that's where it kind of tops out. I don't think we are, looking at a sustainable move beyond the 10,400 odd levels for now.
And on the downside, how worse could it get? I mean, could we see some fresh lows for 2018 being struck, or would you say that we will hold on to that 10,000 mark?
So we've, ever since this kind of reversal of the trend has happened, we've been making lower lows consistently on the market, with every sell-off that has kind of happened. My sense is that while we've seen critical levels being broken, I would tend to think that 10,000 should provide a strong psychological support to the markets. It's going to be a fairly critical level and probably difficult to get out from because a lot of the domestic investors, that's kind of a level that they're going to be watching out for. In terms of just pure data build-up as well, both for March and April, we continue to see a fairly strong OI build-up at the 10,000 puts as well, and that should again provide some strong support to the market at that level. So I think for now, my sense is that we are looking at the 10,000, 10,400 odd range. The lows that we saw on Friday could probably get tested again and probably lower down to 10,000, but that's where I would probably call it more a bottomish phase.
Tushar Mahajan joining in as well. Just wanted to get in your perspective on the PSU banking space. Do you think that given all of the negative news surrounding it, this kind of a shift that we're seeing from the PSBs to the private sector banks is likely to continue into the year?
Most definitely. I think with the re-announced in October, there was some glimmer of hope on the public sector banks, saying that maybe now they're going to start competing with the private sector banks. There's going to be the NBFC, the good run which the NBFCs had in the absence of PSU lending, that could end. But I think this fresh bout of news on scams, and that seems to be never ending. You continue to hear news stories coming out every day. I don't think that glimmer of hope was too long lived. And the shift from public sector to private sector, and to some extent even NBFCs, I think that's definitely going to continue. We are not out of the woods on the public sector banks, clearly.
Yesterday, of course, it was just probably a flash in the pan move, but we saw a lot of those FMCG or consumption related plays, the likes of Britannia, Marico, etc. They had a fairly strong day. And it seems like the underlying story for this space is now improving. The overall rural thrust is working in its favor. The kind of new value-added products that the consumers are now adapting to as well. All of this seems to be boding well. Do you like the domestic consumption story?
Very clearly, I think that's a trend which is clearly visible. If you just split the market into, let's say, the broad macro stories and the micro stories. For the last 2 to 3 years, India was really a macro story. Macro stability, etc., was the theme in the market, so to say. And while earnings were not coming through, people were willing to discount that in terms of a stable macro outlook. I think that has shifted. So while we all know that the headline macro is kind of deteriorating a little, the micro story is improving, and clearly, earnings are coming through. Now, within that, I think the consumption space is something which has been very closely watched for, and like you said, things are improving on the rural economy front as well, which is going to be a fairly large driver both of volumes and margins in this space. So we do like this story, and also given the overall uncertainty that the markets are facing, these are also good bets to kind of hide on from a defensive play as well.
Right. Tushar, what about metals? With the February correction and all the news flow around the tariff hike by the US government, do you think is all the pain now behind us and in the price, or do you sense that there could be some more volatility around the steel segment in particular?
So the sector per se is definitely volatile. I think it has faced a fairly strong brunt, especially with the tariff hikes coming in from the US. Personally speaking, my view on the space right now is that given the fact that we are looking at growth rebound globally, and that clearly seems to be a consensus view that global growth is rebounding, metals is a space which should definitely perform well. So we've had that initial knee-jerk reaction on the tariff hikes and all of that, and that's kind of reflected in the price. From here on, I would believe that the metal sector per se is going to outperform the broader markets.
Okay. What about looking a little isolated from the mid caps, for instance? Some of the road stocks have been holding out very well. In fact, they're still quoting at expensive valuations, and that's where we are seeing order visibility as well. Then there is IT, and that's pretty much across the board, large caps, mid caps alike. Even today, you've got a good move on Mindtree, NIIT, etc. Are these the places to hide?
Very clearly, I think so. The road stocks, yes, have been holding up well, quite contrary to what happens to that sector, in the previous kind of downtakes or market volatility. And there's good reason for that, the fact that earnings visibility, order books are clearly visible on that sector. Having said that, a lot of these companies are still kind of relatively smallish, and they don't have, they can't really provide that huge massive delta to portfolios. So per se, on a standalone basis, yes, the sector is a good hiding spot, but there's only as much as you can hide in a few limited names on the road sector. On IT, I think given that it's a play on both global growth, it's a play on the fact that the dollar is appreciating, the rupee is kind of depreciating, so there is margin tailwinds coming through, and that is helpful. And in general, the way Indian IT is kind of transforming itself, I think that's clearly a good hiding place in an environment of huge market uncertainty per se. And when I say that, I think across large cap and mid cap IT, you see that trend clearly visible. Last year was clearly a year where IT was probably amongst the most hated sectors and was a funding short. I think a lot of that positioning has changed into net over long, and that's something which we kind of continue to see as a trend which will play out in 2018 overall.
And already we're getting emails hitting our inbox for dates that the upcoming earnings season are going to be declared for some of the big companies. What's the expectation, given that it wasn't all that bad in earnings at last quarter? Do you think that the follow-through will continue? Are we expected to see more hits than misses?
I would think so. I think almost in over about 12 quarters, the last quarter was probably the first quarter which saw more hits than misses from consensus estimates. Obviously, the estimates have also been consistently lowered over the last 2-3 years, so that base effect also helps. I personally think that that trend is something which is definitely going to sustain, and we will see that more earning beats coming through in this quarter as well, and that's really going to be the India story for 2018.
And what about the stretch valuation picture that we're seeing for majority of the mid caps and for the markets as well? Are you comfortable with the valuation picture?
So from a mid-cap sector perspective, I think overall stocks, if you look at individual stocks, which are fairly, run up significantly, we've seen probably 30 to 40% correction in individual names per se through this year. There could be pockets of excellence coming through, the expensive ones like the road sector, that continue to trade well. But overall, from a sector perspective, while there has been correction, there's probably still no rush to get into it and start getting ready with your shopping cart. I think mid-cap and small-cap stocks could probably have some more scope for correction. On the large-cap names, if you look at the index per se, what has held up, we are talking about a 10% correction on the index, but that's primarily because the IT sector and private banks like HDFC, Kotak, and L&T, which have pretty much contributed strong returns. So these are your typical hiding spaces, which we've anyway spoken about, both private banks and IT, and those are stocks which are also expensive. So I think they will probably, the more expensive ones will continue to be expensive in an environment of uncertainty, but stocks which have had a beating will have pressure. At this point in time, on the mid-cap space, there's still scope for more valuation correction. On the large caps, one could start nibbling into some of the more beaten down names.
Catching your eye in the primary markets, it's been fairly active here, Tushar, as well, with a lot of IPOs hitting the market. Are there any specific themes or business models that you like within the space? Defense has been a particular theme as well that's seen quite a bit of thrust here.
Fair enough. I think the primary market has had a good run in 2017. We'll probably see that trend continuing over here. We've seen the kind of response which, in this year first the Amber IPO kind of got, and just the recently concluded Bandhan Bank as well. So I think good companies with good valuations will continue to come through. There will be definitely more diversification of stocks. So currently, like you said, defense. There aren't too many defense plays, but in this month itself, we've kind of had almost two government defense companies which have hit the bourses. So I think clearly you'll see new sectors opening up, you'll see new companies kind of listing, and that trend will, I don't see why that shouldn't continue into the year as well.
Okay, Tushar, great speaking with you. Thanks so much for taking the time out and giving us perspective on where you feel that the market is going to head. Seems like not quite done with the volatility. Upside, Tushar believes in the near term at least looks capped at 10,400. And don't be fooled by the rebound that you've seen yesterday and today. We could very well get back to losing ways soon after.